Ira Epstein of Linn Associates with your agriculture update for this Tuesday. And we are now on the 14th of May, 2019. And boy, here we are in the time zone of 4:13 in the afternoon. I can't believe what I'm looking at. A green day in the grain markets. They finally, as a group, have stepped out of their downtrends. I don't know that I'm going to call that the beans are in an uptrend or the meal, but they have stepped out of downtrends, and you'll see why in a minute. You can see that you had an up day in the energies, but they're going to give some of that back off the API number, which I didn't think was overly bullish. We had a nice rally in stocks, made back about a third of what it lost, but I don't think this is anything but a bounce. I still wouldn't be surprised to see these markets go down a lot more. And in the gold market, overbought, backing off a little. So as we look at the weekly chart of closes in soybeans, we had this 814 area. If we take a look at last week, we finished off at 797, got just under it, and suddenly we're back 20 cents in 2 days, 20 3/4 cents at 817 3/4. One day doesn't make a bottom, and this isn't the end of the week. I can't say that that's where you're at, but I can go to the daily charts and see something that's interesting. You do remember we had a gap right here, and on that gap, this was not filled. Charts like to fill gaps. Now, the grain markets tend to do them quicker than maybe the financials do. We'll see what goes on. But this big bounce also took out these high areas. Now, if we come in right here and we take a look at the gap, the low was 840 and a half, and then the high the next day was 834. So you've got a 6-cent gap in there. If you look where you reached up today, you got up to 838. You got 2 cents basically left to fill the gap on the upside. And at that point, a lot of traders are going to look at the market and say that's all that it did. We'll see. I don't know. You have a combination in grains, especially soybeans, of wondering what happens with the late planting that's going on in the corn market, wheat, what will go on there. We have other markets that'll be impacted. Can any acreage shift over to beans will be the question. If we take a look at today's rally, you cleared 836 1/4, so the market has now got a lower low and a higher high and a gap left in it up to the 840 and a half area. If the market reaches higher, possibly it gets to the 18-day average of closes to find some resistance. When we look at Bollinger Bands, you know what they did. They ran the Bollinger Bands all the way down, but you've got to go to the next chart to understand it. At that time, you had the embedded reading. And once you lose the embedded reading, my belief, I can't prove that it's going to happen every time because it doesn't, but my belief is, and what I teach is, that when that occurs, the odds favor price and the 18-day average coming together. Do they get real close? They should. That doesn't mean they have to. Look at the meal market. This is what you looked like yesterday, had the embedded reading. Once the market got itself going, if it's going to run and lose the embedded reading, I'm going to look for that 18-day average of closes. Yeah, you got through it, 298 3/4, and you closed right under it. So as far as I'm concerned, the downtrend ended. I'm not telling you an uptrend's begun, and the market has got back to a neutral spot as I see it. In the soybean oil market, even though you didn't get up to the 18-day average of closes, and even though you still have lower highs, lower lows, the most important thing on this chart to me is that you've lost the embedded reading. And in losing that, it puts into play immediately that price and the 18-day average get together. I am wrong in my thinking if yesterday's low of 26.21 is taken out before that occurrence happens. Now, when I say they should get there, as I'm going to repeat it over and over, if I knew every time it would get there, do you think you'd be seeing me? I'd be gone. It'd be better than a racetrack, better than betting on a ball game. But the odds are pretty high. Go in and look at your work. In the corn market has now no trend. The market, as we talked yesterday, had one day where it got under the Bollinger Band on a close, and similar to here, this market has a tendency of not staying under those Bollinger Bands very long. You came back yesterday. If you go up, I'm looking for the first resistance, the 18-day average. To take out the bear trend in the market, you've got to take out 368 1/4. It's done it. Now the next resistance point, if it should rally, is the upper Bollinger Band at 373 3/4. And of course, if it really went crazy, the 380 zone, the 100-day average of closes. Is it trending? It is not. If you define, as I do, a trend as having, if it's an uptrend, higher lows, higher highs, you don't have it. You have a lower low and a higher high. You have no trend. You have momentum pointing up and the bias up with resistance, possible target, that upper Bollinger Band. Let's go to the wheat to yesterday. Wheat had a huge reversal day up, stopped at the 18-day average of closes. The momentum in the market had gotten oversold, starting to turn up. If it goes up through the 18-day average, to me the next resistance will be wherever that Bollinger Band is. It's exactly what you did today, and then the market from there backed off a little bit. Can it go higher? Yes. Materially, I don't know. The market's still not overbought. If it slices through all this, well, then you've got the 100-day average. But I think it's more likely to now start whipping back and forth between the lower and upper Bollinger Band, because as you can see, those black lines starting to go sideways. Let's see if they do that. The sugar market's at a real interesting juncture. You've got the pattern of higher lows, higher highs, but you're under the 18-day average of closes, so the bias is down. This wipes out each other. If the slow stochastic reading loses with the red when it reopens tonight over 20, the odds favor price and the 18-day average will make a run at each other unless you get through yesterday's low of 1166, which would put back in play lower highs, potentially lower lows at that point. That would probably force the slow stochastic down again, stay embedded, and put into play 1139. You're at a tipping point in this market. In the coffee market, all the coffee did again is go back to the 18-day average of closes where it's had a heck of a time. Now, in fairness to the market, the swing line's up. This morning when I was doing my subscriber video, which most of you that have wanted to see it, you know, I put out a subscriber video for people, I said it's got to close over the 18-day average in order to give the bulls a shot. Didn't do it. You're no longer bearish, but I don't think you've joined the bull camp in this market. In the cocoa market, if we take a look at yesterday, the market started fighting between the 100-day average and the 18. Today, you went and did it again, and the market slipped back. If this market takes out the lows of 22.82, you put into play the lower Bollinger Band. In order to get things going to the upside, you've got to get over 23.52. The softs are in a real interesting place on all the charts. And the cotton market, after 6 days in a row of a lower Bollinger Band, finally got over it. Okay, the odds favored it wasn't going to stay under that. That's how this algorithm works. But are the bears hurt? Nope. They still have this embedded reading. Until that's lost, I think on these rallies, this market's still one of their sell candidates. In the cattle market, as long as you have that embedded reading where the slow stochastics, both numbers are under 20, I think that the rallies in the markets are short-lived and the market tries to see how far down it can push itself. The same thing in the feeder cattle, the embedded reading still pointing down. You got in this pattern now, this low took out this low, so you got a higher high, lower low, certainly not a trend. Notice here, you had a crossover that was bearish where the 18-day got under the 100. Often that leads to a new break low for that move. Market started down today. It accomplished it by getting under that. That's the lowest low since that crossover has happened. Now in the hog market. In the hog market, you're still very much in a downtrend. The market is oversold. The stochastic study, as you can see, both numbers under 20, but not yesterday. It's not an embedded market. It's oversold. If it drops, I look for strong support, 87.40 down to 86, let's call it 70. Right in that zone. If the market takes out 91.72.5, it might put into play the 18-day average back at the 93.77.5 area. You know, if you like what I do here, then we have booklets on this. This is called The Guide to Technical Indicators, volumes 1 and 2, that I put together with my good friends a while back from Futures Magazine that is no longer in business. But this was the best, I think this was the best they ever did, to be honest with you. And I helped them resurrect it, made it modern for everything, got it to look great so that we can send you a link and they both open up right on your computer screen. How do you get it? It's really simple. Give us a call or go to our website. If you go to our website, it's www.iraepstein.com, and what you'll see is a carousel of free offers. Click it and you're going to see Guide to Technical Indicators. Choose anything else you want, go from there. If you call my staff, they'll take your name, your email address, and send it right out to you. I'm Ira Epstein. You have a good evening.